Other news, Zomato has reported a weak set of quarter 3 earnings. Profit, EBITDA and margins, they all missed estimates, while revenue was in line with what we were penciling in. Margins, in fact, they contracted quite sharply by 177 basis points on a sequential basis to come in at 3%. Company's profit also was down by 66.5% to 59 crore rupees from earlier 176 crore rupees. Some of the key factors which weighed on Zomato's EBITDA were customer acquisitions and investments. Going forward, management also said they are likely to operate in losses for the next year or so. But what's wrong there? What's happening? Well, Dilip Cheran, Image Guru, will shed more light on this. Welcome to Rush Hour, Mr. Cheran. Let's begin by talking about Zomato's results. Well, are you surprised with this? Were you expecting this kind of revenue fall and profit fall?
Sumit, the answer to your question is no. I think it's deeper than we thought it would be. And I feel that this is perhaps because Zomato is investing heavily with obviously good management thought process into Blinkit. And in this process, the investments as well as the hope of returns is not as the investments are high, but the returns are likely to stay low to just medium for a while more.
Well, also, as we know that a lot of investments went into the quick commerce venture of Zomato. Well, that has also dragged down. Do you think quick commerce can be a bigger problem going forward because investments are going there plenty, but returns may not be the same?
Looking at both brand Zomato and brand Blinkit, my sense is that companies are investing very heavily in the quick commerce space. The returns are not going to come as soon as they expect. And even when they do come, my sense from the market and understanding consumer behavior is that in the end, there will be a bunch of winners and a whole large number of losers. Quick commerce is not for everybody. Zomato has the advantage that in the product category that it exists, quick seems to be something that the customer and the consumer currently values very highly. So the joint branding of Blinkit and Zomato in terms of what they are offering to the consumer seems to work. Is there light beyond this sector itself? That's something that we need to look at. My reading is that there isn't very many product categories. There aren't very many product categories where this kind of consistent demand for quick commerce is likely to grow, increase, and stay stable.
Well, Mr. Cherian, also Zomato is expanding too fast. As per the latest estimates, its ticket booking app District has crossed 6.5 million downloads. Do you think it's expanding too fast and that can also weigh on the company in the quarters to come?
I think that there are two things to take into account here. One is how sincerely and how deeply are the employees of these companies committed to this style and this exaggerated emphasis on new businesses. To my mind, many of these companies have a lot of employees who probably still don't have their shares vested, and that in a publicly listed company like this tends to be a drag, especially at the top management level. So this is one kind of problem that we need to check whether the employee commitment to the kind of diversification, including into the event space, is something that has the force of complete commitment by the teams involved. The assessment I get looking at the brand itself is that I'm not quite sure that quick commerce and very large format ticketing companies have very much in common. Because when you're going for a ticketed event like this, It is not a matter of quick commerce. It's a matter of planning and deciding when you're going for it. Now, is there a big advantage? The only advantage is that Zomato has this database of people who have the income to spend on things like this. And if they're able to club the expenditure over a period of a week or something and figure out whether the same customer is likely to make a purchase for a highly ticketed event, then that may be a thought process that could work. But as I said earlier, you need to be committed in terms of also your employees. Your management needs to be aligned, and the brands need to be, brought into a kind of space where the natural alignment between the brands allows for growth and allows for investment enthusiasm.
Right, Mr. Cherian. Thank you so much for talking to us and shedding lights on these important points.
Thank you.
Meanwhile,